Welcome to Smart Stock Watch. Today is April 25th, 2025, and we're diving into Erie Indemnity's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Erie Indemnity, a major player in the insurance industry, has just released their Q1 2025 earnings, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the financial highlights. Erie Indemnity reported a net income of $138.4 million and earnings per diluted share of $2.65 for the first quarter of 2025. How does this compare to last year, John?
Erie Indemnity has shown a solid performance this quarter. Compared to the first quarter of 2024, net income increased from $124.6 million and EPS rose from 2.38. This growth is driven by a 9.1% increase in operating income, reaching $151.4 million, and a notable rise in investment income to $19.5 million.
That's impressive growth. What factors contributed to this increase in operating income?
The increase in operating income is primarily due to higher management fee revenue from policy issuance and renewal services, which grew by 13.4%. Additionally, investment income saw a significant boost, contributing to the overall profitability.
EPS forecast and market reaction. Now let's discuss the earnings per share. Analysts had forecasted an EPS of $3.19, but the actual EPS came in at $2.65. What does this mean for Erie Indemnity?
This is a significant miss from the forecasted EPS, which could lead to a negative market reaction. The discrepancy might raise concerns among investors about the company's ability to meet expectations, despite the overall positive growth in net income and operating income.
How do you think this will affect Erie Indemnity's stock price?
Given the miss on EPS, we might see some short-term pressure on the stock price. However, the company's strong fundamentals and growth in other areas could mitigate long-term impacts.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Erie Indemnity reported a 13.4% increase in management fee revenue. What are the key drivers behind this?
The increase in management fee revenue is largely due to growth in direct and affiliated assumed written premiums. Additionally, there was a rise in agent incentive compensation, which contributed to the higher commissions, up by $61.1 million.
What about their expenses, particularly in IT and customer service?
IT costs increased by $11.3 million, primarily due to higher hardware and software expenses and personnel costs. Customer service costs also rose, driven by increased personnel costs and credit card processing fees. These investments are crucial for maintaining operational efficiency and supporting future growth.
Looking ahead, what risks should investors be aware of?
Investors should consider potential regulatory changes, economic conditions, and technological advancements that could impact the insurance industry. Erie Indemnity's ability to adapt to these changes will be key to its future success.
Key takeaways. In summary, Erie Indemnity has delivered a strong performance in Q1 2025 with significant growth in net income and management fee revenue. However, the EPS miss is a concern. John, any final thoughts on their investment prospects?
Despite the EPS miss, Erie Indemnity's robust growth in key areas and strong market position make it a solid long-term investment. Investors should keep an eye on how the company navigates future challenges.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Erie Indemnity's performance in the comments below.